Hi everybody, thank you so much for checking in. In this video, we're going to talk about Nvidia and AMD, and we're going to compare the two stocks to see which one is a better buy or a better bang for your buck. We picked up Nvidia back in November of 2023 at around 470, and we are still holding for our $1,000 price target, and we will give you guys an update on those levels and if it's still good for entry later on in this video. And for AMD, we entered AMD back in September of 2023, right around 107. Ever since then, the stock has more than doubled. We already exited AMD because we have our reasons that we will explain in the later parts of this video. So let's go ahead and dive right in and talk about these companies and where they're trading right now. So right now, both stocks are trading at elevated levels. You can see that Nvidia and AMD have had very strong rallies throughout the entire year, and they are both trading right about their all-time highs. Now, of course, this chart to any trader or any experienced investor does raise some flags. The fact that it's moving so vertically is definitely a questionable thing. However, there's still opportunity anywhere that you look at the market if you look right and if you are patient. So let's talk about that opportunity for both Nvidia and AMD, and let's talk about which one is a better buy, where we plan to buy them, and what targets we have for each of them. So right now, Nvidia is trading just below 1,000. By the time you watch this video, it may be trading at a different level. But let's go ahead and talk about Nvidia's numbers to start off the video, because that's what really matters in terms of fundamentals when we're comparing the two stocks. Now, Nvidia is trading at a multiple of around 74, and that's compared to a healthy average of between 15 to 25. So anytime you're buying a tech stock, you want to look for companies that are trading between 15 to 25. To the lower end of that is considered cheap, to the higher end is considered expensive. But when we look across the market right now, we do see that many companies are trading at an elevated price to earnings ratio, and that's just because there is so much bullishness and there's a lot of greed going down in Wall Street. Now, does this mean that next week will be a market crash? It absolutely does not. You never know how long markets may rally. At some point, price to earnings ratios reach hundreds, if not more, on certain stocks before they do end up pulling back. And so we're not saying that Nvidia is ready for a pullback. We're just saying that it is a little expensive right now when we're analyzing its price to earnings ratio. Now, in terms of their income statements, their price to earnings ratio can be a little justified because Nvidia is growing at such a rapid pace. We can see that in the last 7 years, Nvidia has moved from about $10 billion a year in revenue to closing out last year to above $60 billion. So of course that brought so much excitement to the stock, and the fact that there is so much demand around artificial intelligence does justify the fact that Nvidia is growing at such a rapid pace. So yes, when we look at the chart, it's quite shocking. It's quite unbelievable that it would continue running higher. But when we look at the numbers, we can kind of see why Wall Street and a lot of other investors are so excited about this one. Now, the next thing we're going to compare is going to be their balance sheet. Their balance sheet is trading at an average of 3 to 1, so there's a positive 3 to 1 ratio. You have about 65 billion in assets and about 22 billion in liabilities. That's a very healthy balance sheet, so overall we give that a 10 out of 10. And then in terms of free cash flow, we can see that Nvidia's leaders are doing a fantastic job building up their cash flow reserves as the company's revenue grows. So a lot of companies, as their revenue grows, they start losing more money because of mismanaged decisions by management, and also their free cash flow doesn't grow. That's not the case for Nvidia. Their management is doing a great job of growing both their net income, which keeps their investors happy and gives them hope for more dividends in the future, and their free cash flow reserves are growing, which allows them to invest money in research and development and to be able to withstand any unforeseen circumstances. Now, before we talk about price targets and where we would like to get in, let's talk about AMD and compare Nvidia to AMD. When we pull it up, the very first thing that pops up, and it's a very concerning thing, is the fact that AMD is trading at a price to earnings ratio of 402. Remember what we said earlier in this video. A healthy price to earnings ratio should be between 15 to 25. And so the fact that AMD is trading at 402 is very concerning. You will find companies on the market right now that are trading at a very attractive price to earnings ratio. In fact, Google is actually one of the cheapest tech stocks out there right now because everything else is riding at such a high multiple after the market rally. But AMD in specific, this is a company that we would be very wary of in terms of the very near-term future. They do have a promising future when it comes to the field or the sector that they're in. But the very near future for their stock in specific is a little detrimental with them trading at such a high multiple. When we look at their income statements as well, we do see that they did a great job of growing in Q3 and Q4, but overall their annual income for 2023 dropped from the previous year. Now, when we're comparing that to Nvidia that grew their annual revenue by 125%, we can obviously see that Nvidia is the better buy here. When we're comparing Nvidia's price to earnings ratio to AMD, we also see that Nvidia is a lot more affordable when it comes to price to earnings multiples. AMD also, on their balance sheet, we can see that the company is a very healthy company. So their balance sheet actually outdoes Nvidia because Nvidia has a 3-to-1 ratio. Here we have a 7-to-1 ratio. So we definitely like their balance sheet. And their free cash flow, however, is a lot lower than Nvidia. In fact, it is dropping year over year. Nvidia had a positive free cash flow of around 27 billion, and AMD has a positive free cash flow of around 1.12 billion, which is not comparable at all. So overall, when we're comparing the two companies, we can obviously see that Nvidia is bringing in a lot more revenue. Their net income is also growing at a very, very strong pace. And AMD is having trouble keeping it above 1 billion. In fact, they dropped below 1 billion last year. So this is a concerning sign for AMD. Now, when we're looking at their charts, let's go ahead and pull this up. We're going to go ahead and clear this up. This is the chart that we had on it last time. We're going to go ahead and just clear it up and look at the overall chart. That way we can kind of get an idea of where AMD is trading. When we're looking at the daily candles, first of all, we can see that AMD is obviously trading at an extremely high multiple. It's trading in a very vertical manner, and we do not like to chase vertical rallies. We do believe there is going to be a correction to the semiconductor sector soon. That correction is probably going to happen after Nvidia reaches the 1,000 plus mark. So for Nvidia in specific, we are looking for Nvidia to continue rallying. Our price target on Nvidia has been 1,000 back since November, and it looks like it's about to gain that. After that happens, we do expect Nvidia to announce a split and begin a pullback. The first pullback target for Nvidia is going to be right around 690, which would be a place where we would like to enter. And the second pullback target for Nvidia is going to be right around 506. So if you are looking for entries, these are decent prices to begin looking at Nvidia if you are looking to enter on pullbacks. So that's going to be the two marks that we have our entries placed at. For AMD in specific, we are looking for an entry below 92. We do expect the stock to pull back considerably before we enter the stock, and our second entry, if we does give, would be below 55. So yes, these are very, very aggressive downside price targets. The stock market and these stocks may continue to rally for weeks and months before they give these pullbacks, but in terms of their valuations, these companies are in desperate need of a correction, and so we'd like to see strong pullbacks before we consider them. We are very bullish on artificial intelligence. We do believe that it has a very strong hold on our world in the future. Nvidia and AMD are some of the leaders, but a pullback is due very soon in order for the market to correct itself back to healthy multiples. I hope you guys found this video helpful. Make sure you subscribe and like.